makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Trump's tariff day has finally arrived. The U.S. president has set a minimum 10% levy on global imports, at least 15% on countries with trade surpluses with the U.S. The higher rates will come into effect on August the 7th. Now, Trump's efforts to reshape a global trade have overshadowed big tech earnings. More on Apple and Amazon a little bit later with our Amy Thompson. But ahead of today's tariff deadline, agreements were definitely reached with a handful of trading partners, including the UK and the EU. Canada has had its rates increased from 25 to 35%. Switzerland has been slapped with 39%. So we're still waiting to hear whether the 90-day truce with China will be extended. Mexico has been given a further 90 days to negotiate. So let's bring in our expert panel. Michael Metcalfe, head of macro strategy at State Street Global Markets, our trade czar, Brendan Murray, and then in a second, we'll get to Amy also to talk about some of the tech stocks. Brendan, I mean, it's just hard to keep up, right? If you break it down in terms of countries, it's a little bit more belligerent maybe than we thought it would. But then industries, a lot of questions marks on pharma and the like.
Yeah, exactly. So the big word that we've heard over the past couple of months from companies to politicians to, basically everybody who's watching these markets is uncertainty. And I'm not sure that we got any more certainty today. We have this multi-tiered tariff system that's going to be put into effect next week. So there's a bit more time there. So the shocker from Switzerland, they're going to have to go back and negotiate that down over the next 7 days, or it's going to really hurt them. India is also coming out one of the big losers in this so far, but that just suggests that there's more negotiating to do, more uncertainty, and more leverage that Donald Trump is trying to apply to these big economies.
Michael, there's an assumption that actually the president wants a deal. I mean, what if we were wrong? What if actually a little bit of chaos, as long as it doesn't impact the markets, not too much, is not that bad?
Yeah, I think that explains the reaction that we've had so far today, because there was an assumption that we would get to this deadline and finally uncertainty would be lifted. Hasn't been. And of course, look, markets have been very positioned. Investors have been very positioned for good news. Allocation to equities are at their highest level since the financial crisis. So there's just no room for any uncertainty to continue, and that's why we're seeing an adjustment today.
I'm surprised at how the markets have been behaving, because by and large they've ignored a lot of the uncertainty. Is it because they thought it'd be fixed, or because it's just too difficult to read, because there's also then second and third round effects?
Well, the challenge with it's been quite binary, and it's been very changeable, and so I think you basically just trade on what you can actually see. And look, right now, if the effective tariff rate does eventually land at 15%, that's probably not as bad as it could have been, because that's the other thing as well, is that at various points in this chaos, the effective tariff rate could have been as high as 20 or 25%. So, it's a 15% tariff is bad news, but it's better than what it could have been.
Switzerland. Brendan, what's Switzerland doing?
Yeah, Switzerland thought they had a deal on President Trump's desk just a few weeks ago. It's hard to, it's perhaps the EU deal changed the dynamics there, and that looked less attractive to the U.S. after they got Brussels to agree to what they agreed to. That seems to be one of the potential reasons why that couldn't get over the finish line. But they obviously were confident that they were there, but they didn't get they actually got a higher rate than they were originally assigned. So it's going to take some tough negotiating back in Washington for them to resolve that.
Brendan, I mean, the narrative has now shifted to the EU didn't negotiate hard enough. I mean, they didn't even bring up services, which they could have, and that would have hurt. So I don't know whether it's, the right way to negotiate with Donald Trump is to stand up and actually threaten, maybe like what Mark Carney did, or whether, the assumption of we just need to keep him calm, move it on, and then it'll settle in 2-3 years is the right way.
Yeah, exactly. I mean, I think that's one of the big lessons that we're seeing coming out of this latest stage of Trump's trade wars is that where is the retaliation? What form does it take? It's not taking the traditional kind of we'll just hit you back with the same level of tariff, but we could see it evolve into something like the code word is diversification. We'll just go do smaller trade deals with other countries and try to diversify away from the U.S. That could be one strategy. We see countries sort of team up, to do trade amongst themselves if this big tariff wall is going up around the U.S. economy.
Michael, how are exporters actually dealing with this? So does it automatically, even just in the U.S., we don't know whether it hits inflation maybe more than it hits growth?
Yeah, so actually so far, I think that the tariffs we've seen so far have definitely been passed through to the U.S., but they're not having as bigger impact on consumer goods as we thought they might have done. And there's some nice papers done on the first round of tariffs, which actually suggested that much of the tariff gets absorbed by the retailer margin and doesn't get passed on as much as we think. And I think that's been borne out by the data so far.
Okay, so where do you look in the markets for it to make sense? I don't know whether it just needs to play out, whether there's a lot of data out of the U.S. today.
Yeah, well, look, the labour market obviously is going to be key for the Fed, but I think also the fact that we haven't had the pass-through on inflation so far is also really important for the Fed. And I think, actually, if that continues, which we think it might for the next couple of months, then soft labour market data really opens up the possibility for further Fed rate cuts.
So where do you see opportunities in the markets right now?
Well, so the thing that might help markets right now, actually, is the idea that if you do get bad economic data, Fed pricing is going to come in quite quickly, I think, and that will provide a support. So I think there's probably opportunities at the front end of the U.S. rates market, but then also potential for weaker dollar as well.
But it has the added complication of Donald Trump, going after Jay Powell every day. So I don't know whether that means that he's even more reluctant to cut rates. Yeah,
look, quite rightly, the Fed is defending their independence. But I think if you start to get soft payroll, softer labour market data in payroll, because there are many other pieces of evidence that suggest the labour market is softening. It's just not there in the unemployment rate yet. If you get validation from the unemployment rate, then the Fed can quite rightly just point at the data and use that as a rationale for easing.
Brendan, could we see the U.S. being friendlier to China than Switzerland?
Yeah, that's a good question. The Secretary Bessent and Ambassador Greer came out of those talks earlier this week. I wouldn't say in a celebratory mood, but it was more kind of somber and resigned to the fact that this is the process they're going to have to go through with China now, that it's going to be regular conversations, incremental progress, that rather than immediate sort of trade deals. But yeah, I think it's that's the $1 million question is how does China play into this matrix that Trump has created, and can Trump punish allies and still get them to work with him in his efforts to isolate the Chinese economy and reduce reliance on Chinese imports.
And yesterday, Brendan, copper was reeling because we thought that the tariffs would be on all of the copper imports, and actually half of them were basically exempt, so we saw a massive shock move. Could we see the same with certain industries?
Yeah, exactly. Well, they can add to those sectoral tariffs down the road if they did what they did this week in a surprise, but they can add products onto those. The pharmaceuticals, the semiconductors, all of these other sectoral tariffs are going to start rolling in over the next week or two, and that's just going to add another layer of complexity. What was missed yesterday was the court hearing where the judges were casting doubt on the legality of Trump's reciprocal tariffs. So that's a whole nother, that throws us into a whole nother arena of uncertainty as to whether he'll even be able to use these over the long term.
Okay, thank you both for joining us. Michael Metcalfe from State Street Global Markets and our Brendan Murray. Now, Apple reporting its fastest quarterly revenue growth in more than 3 years. The result, of course, topping estimates after demand picked up for the iPhone and products in China. Meanwhile, Amazon projected weaker than expected operating income. The outlook leaving investors searching for signs that the company's huge AI investments are paying off. Well, joining us now is Amy Thompson, our tech, media and telecoms team leader for EMEA. So, Amy, as always, thank you so much for joining us. Let's start with Apple. What drove the beat?
Yeah, there are a few things. There was some tariff buying. The iPhone 16 series did better than expected, but the big surprise was China. They returned to growth in China for the first time in 7 quarters this time. And I think a lot of that was down to iPhone sales there, surprisingly doing a lot better. They've been really suffering versus local competitors like Huawei for the last several quarters. And the Mac lineup did really, really well. I think the Air ended up being the most popular laptop in China this time. A lot of that was driven by a subsidy program that China rolled out that basically incentivized people to trade in old electronics and get new ones, so that boosted everybody.
That's so interesting. What about, what is the state of the Amazon Web Service? Again, this is the arms race, basically, for data center capacity, the thing we all need.
Yeah, I feel really bad when this happens to companies because Amazon's AWS unit grew 17%. It hit the numbers that the street was looking for, but the whisper number was much, much higher this time. If you look at how Microsoft and Google did, they were both growing at 30+%. Mm-hmm. So that really left investors and analysts asking, what gives? We're in the middle of an AI boom. Compute is the most valuable resource there is. Why isn't the biggest cloud provider cashing in on this more?
Do we know why?
Well, Andy Jassy said that they need to build more data centers. They can't keep up with demand. Finding enough electricity for those data centers is a problem. And he also made some comments about making it more efficient for companies to actually run these AI programs and use them.
So interesting. Amy, thank you so much, as always, for joining us. Amy Thompson, they're in charge of tech and media for EMEA. Now, coming up, Mediobanca reports higher profits as the Italian lender seeks to fend off an unwanted takeover by rival Monte dei Paschi. We'll be speaking exclusively to the Mediobanca chief executive. That's next, and this is Bloomberg. Welcome back, everyone. Now, Mediobanca reported higher profit today after setting aside less money for loans turning sour. Now, it comes as the Italian lender seeks to fend off an unwanted takeover by rival Monte dei Paschi. Well, joining us now is the Mediobanca chief executive, Alberto Nagel. Mr. Nagel, as always, thank you so much for joining us. So let's start. There's various, operations that could go on in Italian banking. You're still waiting, for example, for Generali to decide whether they'll accept your offer to swap Mediobanca's Generali stake for control of its private banking arm, Banca Generali. Have you had any interactions or any assurances from Generali that they will go for it?
Good morning, Francine. Thank you for having me in your show today. We have had a number of interaction with them. So basically, we received from them documentation regarding their existing agreement, a distribution agreement with Banca Generali. We reviewed them, and we have sent them a proposal about extending in the longer term this agreement, giving also exclusivity for our distribution network. So now we wait for their feedback, and we hope that they're going to give us a feedback within the 6th of August, so that we can call at that point, if their feedback is positive, our AGM, so to give to our shareholder the possibility to decide on this transaction. So our aim is to give to our shareholders all options that are adding long-term value to the bank. On one end, we have our 3 years plan, which is over-delivering on targets and financial performance. On the other end, we are also putting on the table this option, which is very interesting because it's going to create a clear leader in wealth management, not only in Italy, but in Europe. Because combining Mediobanca and Banca Generali, we will have a clear leader at European level.
So just to be clear, you don't have any indications from Generali yet what they think about the deal?
Yes, they are working on reviewing our proposal, and we have asked them if they can give us a feedback in time so that we can call a general meeting so that our offer on Banca Generali can be on the market before the end of Monte Paschi offers. Again, in order to give to our shareholder all options to decide.
So again, you're talking about the August 6th. Is this you mentioned yesterday that you may actually, bring forward to August 21st this investor meeting that was previously delayed. Why is it so difficult to have a firm date?
Well, because we have delayed the AGM because there are shareholders of Mediobanca which are also shareholders of Generali, and they wanted to have more info and feedback from Generali about what Generali thinks about this transaction. So we took our time in order to table this offer to Generali, which we sent a couple of weeks ago, and that's why we are waiting for their response next week so that we can be on time to call an AGM by the 21st of August.
Okay, well, Alberto, Nagel, let's talk about the other deal that's been on offer. So Monte Paschi has basically offered to buy Mediobanca, and the chief executive was on this program a couple of weeks ago, and he said that you probably won't stay in the job. In fact, he said firmly you won't stay in the job if he's successful. What's your response to that?
My response is that my position is the least important. What we are taking care of today is the interest of the shareholder. And the transaction which is on the table from Monte Paschi has been judged by our board totally inadequate in terms of financial content and industrial content. So it's not about me, it's about the offer that we have to discuss.
And where do you think a lot of stakeholders are on that? The CEO, Mr. Lovaglio, indicated that he'll see an offer already as successful even if he only gains about 35% of Mediobanca. What would you do if the bid only reaches that level?
Well, a threshold of 35% is not customary and is a sign of weakness, because if you are sure to get to control, like many other bids, you put a minimum of 50+1 shares to get the control. If you put 35%, is because you want to get to de facto control of Mediobanca, which is also contrarian to the narrative of Monte Paschi, because Monte Paschi financial bid is built on use of DTA, the deferred tax asset, and this DTA, as you know, can be used only if they get to 51% of Mediobanca. So it's a bit of a contradiction between their narrative and the condition they set.
But what would you do and what can you do, again, if the bid only reaches that acceptance level?
Well, we are, as I said, delivering or over-delivering on our strategy. Our strategy is a strategy where we are focusing more and more on wealth management and IB, capital light. On top, we have also work at Banca Generali transaction. So for our shareholder, according to our view, there is no match between Mediobanca standalone plus Banca Generali and the possibility to be part of a group of Monte Paschi at 35%, which is something that you have never seen in the financial environment, where a company to do synergies, to control, has to get to 2/3 and then make a merger to extract the synergies of a transaction, which is one of the reasons why we do transaction of M&A.
How big is the probability that Monte Paschi actually gets Mediobanca at the end of the day?
Well, this is up to our shareholder. No, we are, as I said, recommended to look carefully at the content of Monte Paschi bid, because financially it is a discount to our market value. No, as Monte Paschi is half of our market cap, this transaction is construed where basically our shareholder should get 60% of the combined entity but not pay the premium. So this is something that, honestly, a long-term shareholder of Mediobanca should not accept.
The Italian government, which is Monte Paschi's largest shareholder, has indicated support for Lovaglio's effort to buy Mediobanca. Have you had since discussions with the government?
With the government, we are interacting because every single month, because of our activity and also the Golden Power procedure, which was terminated with a positive outcome for us. So the government is having a stake in Monte Paschi and is having an important representation in the bank. They wanted to create a third pole in Italy. They wanted to start with BAMI, but as you know, BAMI was then under the takeover bid of Unicredito. So they changed program, and that's why we have this offer on the table. No? For us, this does not make sense financially and industrially, but it's common that the government is intervening in banking consolidation. We have seen this in Spain. We have seen this in Germany. We are seeing it in Italy, on us, on Unicredit. So it's a new standard, and we have to be used to this and take care of this. It's something that is happening.
Do you think the Italian government has more influence actually on banking M&A than in other countries, given the example you also mentioned with Unicredit? And is that appropriate?
Well, if you see what is happening in Germany and the barrage that Unicredit is having on Commerzbank, or what is happening on BBV, on Sabadell, with then the follow-up of EU intervention to limit this influence, I won't say that in Italy we have a more important one. It's similar to other countries, and it's a new fact. I don't think that is going to help the consolidation. We are going to have a stronger banking group in Europe with this kind of intervention, but it is what it is, and we have to start from this.
How different do you think the Italian banking landscape will be in December of this year, in the next 6 months?
Well, I think that some consolidation has already taken place, and this makes sense because we have seen BPER buying Sondrio. We have seen Illimity being bought by IFIS. So more to come, even if I would say that the two leaders are big enough to abstain from doing more deal in Italy. So I think other transaction may happen I would say in the second tier. So basically the one of BPER, Montepaschi, Mediobanca, if we can do the transaction with Banca Generali. So definitely we'll see fewer bank and more consolidation in the months to come. We need also, in doing this, to take into consideration the government intervention.
Alberto, Nagel, thank you so much for your time today. That was, of course, a Mediobanca chief executive talking about Italian banking and Mediobanca. Now, in other news, Kering set to award a €20 million sign-on bonus to Luca De Meo when he takes over as chief executive in mid-September. Now, the luxury company told shareholders it's compensating De Meo for giving up part of his long-term remuneration when he left his previous role as Renault chief executive. De Meo faces an uphill task to turn around Kering, which earlier this week reported another plunge in sales at Gucci as shoppers defected from its largest brand. And Bridgewater Associates founder Ray Dalio has sold the remainder of his stake in the hedge fund and left its board. Well, Bloomberg understands that Bridgewater bought the remaining shares. Separately, a source says that the Brunei Investment Agency, a sovereign wealth fund, has invested in the company, giving it nearly a 20% stake in the firm. The move by Dalio ends a leadership transition that started more than a decade ago. Coming up, much more on President Trump's tariffs barrage and what it means for Switzerland, the EU, and major corporates. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Tariffs Day, President Trump sets a 10% minimum global rate and outsized levies on Canada and Switzerland. But Mexico gets a 90-day reprieve. Trump's tariffs will extend a global stock sell-off into a 6th day as the narrative shifts away from earnings. Plus, big tech divergence. Apple reports its fastest quarterly revenue growth in more than 3 years, but there's a cloud over Amazon. Now, earlier this week, the European Union accepted a 15% tariffs on most of its exports to the United States, including automobiles. While averting a full-blown trade war, Bloomberg Intelligence estimates that the decision could cost EU car makers €2.5 billion. Now, let's bring in Bloomberg Intelligence's Chief Content Officer, Tim Craighead. Tim, I'm so happy to see you because, first of all, you have some great facts, and you're blowing my mind with Switzerland and coffee, which we'll get to in a second. But from a corporate earnings perspective, what's the overall impact for Europe?
So our equity strategy team has been calculating something on the order of a 4 percentage point hit to earnings. That's the bad news. The good news, if you want to take it this way, is that If you look at the Stock 600 consensus earnings expectation, it's dropped about 5% since April 1st. A lot of that's now embedded in the numbers. And, we've got questions looking ahead of how much pre-buying was there, things along those lines. So what will be the hangover in the second half? But at least current estimates are showing down 4, 5, 6%.
So I need to ask you about, the industries, because there's a lot of question marks about pharma, maybe, wine and spirits, but you also have some great facts, like, the quirky, crazy stuff about tariffs.
Yeah. Well, probably the quirkiest one, which we're looking for how this will feed through, is you think about coffee and consumer products. Switzerland, I was talking to Duncan Fox, our food and beverage analyst. Switzerland is the third largest exporter of coffee to the U.S. They bring it in, they process it. Think Nespresso, think Starbucks. They've expanded their U.S. footprint dramatically. Now there's a 39% tariff. Now, granted, they've got a manufacturing base around the globe, including the U.S., but there is an export business there. So that's interesting.
I did not think that Switzerland was exporting so much coffee, but you're right. Well, we all drink Nespresso and the like.
Yeah. And, you think autos.
Yeah.
Volvo and Porsche are the ones that manufacture almost 100% of their product in Europe and export it to the U.S. To the degree that there's, a 15% tariff, that's not great, but it's a lot better than 25 or 30%. So they get a bonus relative to where expectations had gone. Interesting to think about BMW and Mercedes. They export 185,000 SUVs from the U.S. to Europe. Maybe there's a reciprocal thing there where there's an extra bonus for them. Those things have yet to be determined, but certainly the auto industry is getting off less bad than what was expected.
So interesting. Tim, thank you so much. Tim Craighead, their Chief Content Officer at Bloomberg Intelligence. There's also a really cool thing that we have that you should check out on our Bloomberg, on the website, which is a tariff tracker. I love it because you kind of can play around with it and look at, for example, luxury or spirits and see how they get hit almost in real time. Now, some within the EU have criticized the deal with the U.S. as unbalanced. Joining us now is Elvire Fabry, Senior Research Fellow in Geopolitics of Trade at the Jacques Delors Institute. Elvire, thank you so much for being with us today. Could the EU, this is all about tactical positioning, right? It's like playing chess, but on steroids. Could the EU have negotiated a better deal? I know there's a lot of anger in certain parts in Europe that they didn't mention services. If you look at how much, services, American services, U.S. services, Europe buys, it feels like there could have been more of a negotiation.
Of course, we could have confronted much more forcefully the U.S. We have the trade instruments for that. And you have in mind that we even have the anti-coercion instrument. But the EU is in a very special position compared to all the other trade partners because we have our hands tied, because we need to keep the US support for security matters and the US support for Ukraine. So this is only an initial phase in the confrontation. We don't have to consider that this is a full deal that is settling all the new conditions for bilateral trade. We will have a second phase when we will get to talk more about the digital sector. And at least for the Europeans, it's a way to win time, to provide some clarity to the business sector. And some clarity that is quite limited because it will remain pretty unstable. So yes.
Elvire, I was going to ask you that. The concern actually with these tariffs is that, they're negotiated, but then it could change in 2-3 weeks. We saw copper yesterday. We thought it was one thing, and then actually parts of it were exempt, and so the price really dropped. Are you going to see negotiations like this or tariffs being taken off parts of either industries or specific products?
We can expect Trump to change tariffs in the coming weeks. Exactly. On the European part, there won't be continuous negotiation because what the Commission wants is precisely to have that stability. There remain many details that need to be clarified in the negotiation, rule of origins, notably, and because the Chinese components in some exports will be more carefully looked at. But we can expect Trump to raise tariffs for any geopolitical additional reasons. So at least for the moment, we have a little more stability. We see the landscape of tariffs beyond what has been negotiated between the EU and the US, providing a more clear landscape. But we don't even know what are the rules if some countries succeed to rebalance their trade with the US. Will it mean that the tariffs will be nullified, or they could go back to the previous situation or not? Those tariffs are there to stay for long, and they will rather continue to increase. And one question that was precisely very clear mentioned by the previous speaker is that we're not focusing enough on the impact that it has on all the US affiliates that are in the EU and that are relying really on. That will be strongly exposed also to those tariffs.
Yeah, Elvire, are we underestimating the second and third round effects? I know Tim Craighead, our chief content officer, was talking a little bit about, for example, the fact that Switzerland, which I'd never thought about, was an exporter of coffee because of Nespresso. Are there going to be industries that will be, very hard hit without us realizing it?
Yes, because it's not only a macro analysis that we need to have. We need to have an analysis by sector, by companies, and the companies, they know pretty well what is the share of the exports to the US and how they can, if they have the ability to diversify quickly or not. This impact will be very different if it's the product that they export can be substituted, or if it's the U.S. consumers. And when we talk about U.S. consumers, it's also U.S. firms really need to have access to that product. And when we get to the discussion on the pharmaceutical sector, this will be very tricky because some products will be could need to be differentiated if they really need it for the U.S. consumption.
Elvire, talk to us a little bit about what you're expecting to come out of China, but also India. You could be in a situation where China gets a better deal than actually some of the U.S. allies.
Yes, for the moment we see that Trump is very cautious with China. China had a very strong retaliation position, and in a way, Trump is facing China via a sort of proxy strategy, rather pressuring third countries, avoiding transshipment, avoiding de-dollarization. He's pressing hard on Brazil because Brazil is increasing its link with China, and Trump is rather increasing that strategy than facing really China. And we could even expect him to have to negotiate a certain deal rather similar to the one that he signed in 2020 with China, accepting some kind of investment in sectors that he doesn't care about, like the green technologies in the US, and confronting China on others, and increasing the export control requirements, not only in the US markets but also with trade partners. And that was something that was mentioned in the EU-US deal, and that continues to be clarified. It's only on the agenda. It hasn't been clearly specified.
Elvire, thanks so much for joining us. Elvire Fabry, they're a senior research fellow at the Jacques Delors Institute. Now, President Trump will impose, as we've been saying, a 39% tariff on imports from Switzerland, one of the steepest levies globally, threatening to leave the country's key exports reeling. Now, let's bring in our Western Europe economy editor, Zoe Schneeweiss, also, frankly, an expert on Switzerland. Zoe, why has Switzerland been hit so hard?
So this came as a complete surprise to the Swiss. The reason for this is Switzerland's huge surplus with the US. If you rank the US trade deficits with other countries, the Switzerland ranks number 12. It's at $38 billion. So that obviously is a big number, and that's mostly due to pharma. We know that pharma is one of the things that Trump targets, and Switzerland just got the short end of the stick here.
So what has been the response of the Swiss government?
The Swiss government has voiced great regret. Overall, Swiss, as we know, usually hold back quite a bit. Lobby groups have been more vocal. One lobby group described the tariff as dangerous. Another one called it arbitrary and irrational. The timing for the Swiss is very unfortunate with this August 1st. It's Swiss National Day, so really the Swiss should be out celebrating. And overall, the government, the government isn't even together today. They're off at 20 different locations giving speeches. Swiss feel very strong about that National Day. So we've got reporters all over the ground in Switzerland, and we will be keeping you updated on anything they say. But at the moment, the Swiss just have been quite restrained, and just that great regret is that big takeaway from Switzerland.
Yeah, and Zoe, I have to say, it's a small country with a mighty exporting power. So you have Swatch Group, you have Richemont, you have Novartis, Roche. You also have coffee. I mean, I've been told it's one of the biggest coffee producers because of an espresso, or coffee exporters because of an espresso.
Yeah, half of the money that Switzerland makes is because of exports. So, and they always describe themselves as a small, export-oriented country. So this obviously is a huge blow. What we've heard from negotiators is that they're still continuing to talk with the US. And obviously these tariffs only kick in on August 7th. So the Swiss, like some other countries that didn't actually get deals, will be hoping that there will be some kind of solution and that 39% isn't the last word.
Zoe, thank you so much, as always, for your fantastic reporting with you and the team. Zoe Schneeweiss there. And the good thing is that actually every week there is a new tariff deadline. So today's August 1st, and then now we look onto August 7th. Coming up, as the EU looks to exempt possibly wines and spirits from Donald Trump's tariffs, we speak to the European Confederation of Independent Wine Growers. That's next, and this is Bloomberg.
This is something that we can absorb and will absorb and is explicitly implied to our profit outlook for the rest of the year.
We welcome the agreement. We hope it's going to be enforced as soon as possible. And ideally more a matter of weeks than a matter of months.
The main thing is that uncertainty tapers off. And then if it is something around these kind of levels, it should intrinsically be manageable.
This provides certainty. And actually, that's something that we value because we can plan on certainty.
And although we start to getting some agreements on tariffs, we know there is not an overwhelming support for some of these agreements, and we have to be careful to see really what's going to be the impact on the economy.
There's positives, there's more negatives. We have more certainty, for example, on automobile, a lower rate, on airplanes, which are excluded. There's still uncertainty regarding, for example, wines and spirits or pharmaceutical products.
We look at some of our clients, whether they're Western or developed economy companies or companies operating throughout the emerging markets, they're just holding off on their investments to see where's it going to come out.
Well, it's certainly more negative than the situation we had at the beginning of the year when we didn't have this issue on the table. My sense is that this is a lesser evil. We need to be in a position where 3, 5, 10 years down the road, we're in a position to strike better deals with the US than the current one.
Now, some of the chief executives there we've been speaking to giving their take on the EU's tariff deal with the U.S. Now, one sector that has been hit by U.S. tariffs is the European wine industry. The EU is holding talks with Washington about an exemption for wine and spirits, similar to that agreed on aircraft parts. Now, with us this morning, Samuel Masse, the president of the European Confederation of Independent Wine Growers. Samuel, thank you so much for joining us. I mean, the winemaking business at the moment is really reeling. It's climate change, it's tariffs, it's healthier, a reduction, I guess, in consumption. How does it survive?
Yeah, so we are facing so much differences since a very long time, and you can add also climate change, which have a huge impact on our market because of reduction of production and stuff like that. And we have to change and adapt. So currently the situation and the uncertainty with the market is, striking us a lot. And this is very bad for, I represent family-owned businesses all across Europe. And this is very bad for us, this uncertainty. And even more when you have a perennial crop like vines, that takes time. You cannot change over time, every year. So yeah, it's very hard to adapt right now and to see how we can face the reality of this uncertainty with new tariff coming up.
Yeah, what happens with the tariffs? So will they have 15%? We were expecting an exemption. Are there any conversations going on that could lead to some kind of moratorium or an exemption for wines?
So we are really looking for this exemption. What we know so far is that we are not on the top of the list for what we know, but what we expect is to get on this list to get 0% on top of what is already existing, because we already have tariff for the US exportation or importation for them. But yeah, we will get this exemption, and also what other person thought before, the impact will be huge also on the US market, because the import of wine is intertwined in the US market, and this will affect also US consumer, but also US businesses.
But is there room for negotiation? And is your confederation, for example, also lobbying Brussels?
Indeed. We are very involved with the rest of the sector to try to make sure that we will be exempt. What we see so far is a response from the EU in our favor, but the problem is it's too political for us to know exactly what will happen, and even more with the current US administration. So it's very hard to see what will happen, but we really hope that exemption will be applied to us in our sector, because this will affect a lot.
Can the wine sector actually absorb 15% tariffs? Can that extra cost be passed on?
No, we already, since the last 10% that we have for a few months now, we find an agreement with our importers to say that, okay, both of us will take a part, so 5% for the importer, 5% for us. But already, like we mentioned, we have an increase or an inflation in terms of, price of the bottle, price of the cork, price of everything. So it's very hard for us to impact our margin, and this could affect a lot of independent grape growers like I represent all across Europe. Like I said, it's very small scale family businesses representing a very traditional culture, I would say, in a sense, and this is affecting a lot, and this could impact a lot of young farmers starting in this business also. And this could have a huge impact, and so that's why we try to exempt and get sure that we don't get that.
Yeah, Semyon, have a lot of the wine growers that you represent, as you say, are family owned. Have a lot of them front loaded to actually ship to the US before the tariffs took place?
Yes, indeed. What happened in the end of 2024, because we are very close to our importers. It's something that is happening for a long time. We can easily say that, like the UK, the US market, it's a mature market in the sense that a US consumer know how to consume wine, and they really enjoy European wine. And they want to find this diversity since it's still in their table, I hope, but I think it's the case. And so that's why it's also hard for us to understand what is going on. But yeah, it's very political. And so doing that will impact that a lot. So yes, definitely.
Semyon, overall, in 3-4 years, do you think that Europe will produce less wine because there's just not enough demand? It's too costly.
Indeed. Actually, there is a lot of factors involving the reduction of production. The first is that I think it's also linked to the economy of the wine sector. As you know, and pretty well for yourself, the Bordeaux is pretty well impacted, Rhone Valley, but you have also other countries in Europe impacted. Italy and Spain also are facing difficulties in terms of economy. And you can see right now an inversion of the pyramid of the age of the producer, because they are aging a lot. And so it will be hard and harder for young farmers or other people to take over their farm and their vineyard, because it's not going to be easy for them to go back in a business that don't make any income.
Yeah. Samuel, thank you so much for all of those thoughts and for joining us this morning. Samuel Masse.
You're welcome. Thank you very much.
President of the European Confederation, thank you, of independent wine growers. Now, IAG, the British Airways parent company, reported revenue for the second quarter that beat estimates. It's cut back its projected capacity growth this year, blaming problems with jet engines and air traffic control. Now, let's talk to Bloomberg's managing editor for space and aviation, Benedict Kamel. Benny, thank you for joining us. Is this a sign of robust demand for air travel?
Yes, IAG really had a good set of numbers out today, and they were the last of the big European and indeed the global airlines reporting. We heard from Air France this week, we heard from Lufthansa, we heard from the US companies last week. So overall, the picture is actually fairly positive, particularly if you look at sort of the front of the aircraft, the more expensive seats, so everything from sort of premium economy to business to first. We heard from Air France, for instance, saying that their La Première, which is their new first-class offering, that was doing very well. We've heard similar comments from Lufthansa, and then today from British Airways parent IAG. The transatlantic route is still intact. There was some concern a couple of months ago that particularly people going from Europe to the US might have second thoughts going into the US because of the cost, but also the disruption potentially at the border and so on. That doesn't appear to have played out quite as dramatically as people might have thought a couple of months ago. So right now, we're in a good place for the industry. The demand is there, and particularly the expensive seats are still selling.
So Heathrow has also, Benny, today proposed $49 billion expansion. Will it actually, £49 billion expansion. Will it ever happen?
Well, that's a very good question. These mega projects, if you think about high-speed rails, if you think about this one, the one thing that is certain is that they are always delayed, they are always over budget, and in the end, some of them happen and some of them don't. Heathrow is under considerable pressure here to upgrade its game. We only heard this week, it wasn't at Heathrow directly, but it affected them. We had an outage of the system, and there are airports around the world in the broader region. If you think about Istanbul, if you think about Doha, if you think about Dubai, far ahead in terms of what the kind of capacity they have to offer. The system, the runway, the terminal at Heathrow, all of that is aging and they have to do something about it. But this is obviously a huge amount of money, £49 billion. That's for the entire project, not just the runway. But the runway is a considerable part of that. But getting these projects through is politically very difficult. It's difficult because you have to move houses, you have to move motorways. So will it ever happen? That's a very good question. You and I probably won't see that day.
Okay, I mean, we're both planning to be here forever, but okay. Thank you so much, Benny Kamel. That was the very latest on Heathrow, our managing editor for space and aviation. Now, the Cleveland Fed President, Beth Hammack, will be on Open Interest at 2 p.m. London time. That's going to be a great conversation on inflation, growth, and, of course, all of these tariffs, especially on August 1st, the deadline for the tariffs. Tune in to that. Up next, Bloomberg Brief, and this is Bloomberg.